Hey guys, welcome back to the channel. In this video, we're going to provide an update of my InvestEngine stock and shares ISA portfolio using InvestEngine's app. But this video is going to be a little bit different to my usual portfolio updates, as we're not only going to look at the performance over the last month, but we're also going to review the performance over the last year. As we're in December, we're at the end of the year, so I think it's a good time to do so. I'm not sure where the year has gone, but here we are at the end of it. If you're new to the channel, I'm Alex, a management consultant by day, and on this channel we like to discuss all things finance with a particular focus on how to grow your money. If you'd like to follow my own personal finance journey with regular portfolio updates of my InvestEngine and Monzo portfolios, as well as a bunch of other personal finance related videos, then I'd greatly appreciate a subscribe. But for this video, let's get into it. And let's start off by looking at the performance of my portfolio over the last month, and then after that we'll review the performance over the last year. And as always, let's first take a look to see how the markets have been performing over the last month to get a reference point for my own portfolio's performance, and also just to understand what's been happening in the market. And let's start off by looking at the S&P 500, given this is a good measurement for the American stock market, a good measurement to see how the American stock market has been performing. And we can see it's been a very good month for the S&P 500. It's up by 3.53% over the last month at the time of recording. And if we take a look a little bit closer to home with a measurement of the UK stock market by taking a look at the FTSE 100, we can see it's also been a good month for the UK stock market. The FTSE 100 is up by 3.12% over the last month. So it's been a really good month for both the UK and American stock markets. And there's very clear reasons for this, and of course it's related to interest rate sentiment, like much of the market movements across this year. We all know that over the last 18 months, the Fed and other central banks across the world have been very aggressive with their interest rate policy. They've been hiking interest rates and they've been keeping them very high. In fact, the Fed has raised interest rates 11 times since March 2022 to combat high inflation. However, that aggressive interest rate policy looks like it's about to change, as this month investors got an early Christmas present with a clearer signal yet that the Fed could soon begin cutting interest rates, as on the 13th of December, the Federal Reserve set expectations for at least 3 rate cuts in 2024, equating to 3/4 of a percentage point, 0.75%. And this is absolutely huge, as it sets the tone that all going well, interest rates will be coming down in 2024. And although the 0.75% figure, the 0.75% expected cut, is less than what the market had previously been expecting, this is more aggressive than what officials have previously indicated. So it's more than what Federal Reserve officials had previously said they'd be cutting interest rates by in 2024. And I see this as good news, as it shows the people in charge are becoming more relaxed about potential interest rate cuts, and this sets the tone for future cuts beyond that 0.75% figure. The reason why the signal for interest rate cuts has come about in December is mainly as a result of trends we've been seeing over the last 6 months with inflation. Inflation has been coming down and is seemingly under control. In fact, at the time of recording, the inflation level in the US was 3.1%, and the Fed is expecting inflation to cool even more next year and gradually over the next few years return to the 2% target level. And because inflation is now getting under control, is now almost under control according to the Fed, they can be more relaxed about their interest rate policy, given the main reason they've increased interest rates is to try and control inflation and bring it back to the 2% figure. And as we spoke about plenty of times in other videos, lower interest rates and cuts to interest rates is good for the American stock market and good for the global stock market. And even if we turn our attention to the UK stock market and what's happening with the UK at the moment, it's also looking brighter on this side of the pond. In the UK, we're a little bit behind in terms of our interest rate policy, but actually on the day of recording, better than expected inflation data came through, with the inflation rate standing at 3.9% at the time of recording, which is a massive slowdown compared to the previous month's figure of 4.6%. And although Bank of England officials do seem a little bit more cautious than the Fed at the moment regarding interest rates, I would expect that if inflation continues to fall in the UK towards that 2% target rate, they may also consider reducing interest rates in the next year, possibly the second half of next year. And this is good news for the UK stock market and follows on from the good news we just went through from the American stock market. So in summary, the positive signals we've been getting regarding interest rate cuts for next year has led to a positive December for the UK and American stock markets and set a good pathway for next year. And now we have a reference point on the market's performance in December. Let's take a look to see how my portfolio has been performing in December, and then let's take a look to see how the portfolio has been performing across the last year. And we can see that over the last month, my portfolio is up by 3.77% in percentage terms and £477 in pound terms. So it's been a good month, and actually it's beat the S&P and FTSE in terms of performance. And I'm now sitting at a portfolio balance of £12,592. And if we look at this graph here, let's see how the portfolio has evolved. So we can see that from the end of November to the start of December, it was quite stagnant, but from the 12th to the 15th of December, there was a good upward trend. And there's no surprise that the trend happened around this time range, as on the 13th of December, that's when the Fed put out the positive signals that interest rate cuts are expected in 2024. So I can see why this upward trend happened at this time. After the 15th of December, my portfolio stagnated until my deposit came in on the 19th of December, and the deposit this month was £2,000 in my portfolio. And this is higher than my usual £500 monthly amount. And the reason why it's higher is because I want to max out my ISA allowance for this tax year, given I am now confident in the Federal Reserve's position on interest rates, and now I know they're being more relaxed. I want to deposit more in my portfolio as I'm a little bit more confident in the portfolio for the next year. So now we know the overall portfolio's performance, let's dig deeper in terms of the individual ETF performance. And if we start off with the HSBC MSCI World, we can see that this ETF is up by 3.93% over the last month. And if we click on it and look at the monthly graph, we can see that there was a significant upward trend after the 13th of December with the good news, with the good signals from the Fed. So no surprises, this ETF has done well given it's heavily exposed to America. If we look at the regional view, over 69% of this ETF is exposed to North America. So given what we discussed about the American stock market and the positive signals from the Fed, there's no surprise that this ETF has done well over the past month, which is of course good news for my portfolio, given that this ETF makes up nearly 60% of my portfolio. The next ETF is the iShares MSCI World Small Cap, and this ETF is up by 8.24%, so very good performance. And if you've been watching any of my previous videos, I've been really hoping for rate cut news, as I felt like this would heavily impact the World Small Cap ETF, given that small caps typically rely on borrowing to fund their growth, and of course high interest rates are not favourable to borrowing and therefore are not favourable to a high growth environment for small caps. And if we look at the graph here, we can see on the 13th of December there was a steep upward trend for growth in this ETF. So I'm very happy about the performance of this ETF, as I've been banging the drum about interest rate cuts and how they'll impact this small cap ETF for quite a long time. So I'm hoping that the Fed actually follow through with this and we do see a positive pathway for interest rate cuts, as it would really positively impact this ETF in my opinion. The next ETF is down actually by 0.14%, and that's the iShares MSCI Emerging Markets. It's up in pound terms but down in percentage terms, given that InvestEngine use slightly different metrics for each of them. And if we look at the graph, we can see it's been a very volatile month for this ETF. It went down at the end of November and the start of December, but also reacted very positively from the news from the Fed. From the 13th of December, there was a steep upward curve. So the Federal Reserve's news so far has had a really positive impact on my portfolio, and I expect this to continue with the other ETFs. The next ETF is WisdomTree's Cloud Computing, and this is the best performing ETF so far. It's up by 12.69%. And if we go onto the graph, there's no surprise, it looks similar to the other graphs we went through. The next ETF is iShares Physical Gold, and this is also up over the last month. It's not spectacular growth, but it's still in the green at 1.54%. And this growth may surprise some people. They may assume that when the stock market does well, it will automatically mean that precious metals don't do well, as gold and other precious metals are traditionally seen as a hedge to the stock market. However, gold has an interesting relationship with interest rates, and I can see why the interest rate news has positively impacted this gold ETF, as gold can be more appealing in a lower interest rate environment, giving lower interest rates means reduced yields on bonds and other fixed income assets. And gold competes for money from these kind of assets. So gold being in a low interest rate environment may actually be a positive for this ETF, given it may enhance the relative appeal of gold compared to fixed income assets. So I can see why this ETF has done okay. The next ETF is WisdomTree's Battery Solutions, and this is up in pound terms, but it's down in percentage terms. It's down by 0.28%, so not much, but it's still down. The last ETF is the iShares Physical Silver, and this is also up over the last month. It's up by 2.13%, so solid growth again. And if we look at the graph, again, it was positively impacted by the Federal Reserve news. So overall, it's been a positive month for my portfolio. And now we know the portfolio's performance over the last month, let's take a look at the performance over the last year. And if we take a look at the performance over the last year, we can see that this portfolio is up by 12.23% in percentage terms and nearly £900 in pound terms. And that's not considering the dividends I've also got with this portfolio. If we head over to the dividends tab, we can see I've also got over £66 in dividends, all from the HSBC MSCI World ETF. And this, of course, was reinvested straight into the portfolio as I have the auto invest feature on. So I'm happy with the performance of this portfolio over last year, and I would have definitely taken 12% growth at the start of the year. Given in January 2023, it's easy to forget many analysts and experts were suggesting it was going to be a bad year for the stock market and that many economies across the world would go into recession. It was expected that the American economy would go into recession and cause a crash, or at least cause some negative spirals and movements in the American stock market. But this hasn't happened. The American stock market has done very well over the last year. In fact, the S&P 500 is up by over 21%, and close to home, it hasn't been as good. The FTSE is only up by 2.91%, but there's still growth. So if we compare my portfolio's performance to those two indices, the portfolio has done a lot better than the UK stock market, but not as well as the American stock market. Of course, we also need to factor in that the metric I just spoke about, I just stated for the American stock market, was just comparing 2 points in time, comparing the performance in December 2022 to December 2023. And this isn't an equivalent metric, a direct one-to-one comparison with that percentage figure we see on InvestEngine. So not equivalent metrics, however, we can still look at the S&P 500 performance and the FTSE performance to provide a rough reference point. And overall, I'm happy with my portfolio's performance, and I'm hoping it will set a path for positive performance next year as well. I'm looking at a 5 to 10 to 15 year time horizon for this portfolio, very much in the long term. So I'm not too worried about short-term market movements, and I'm very confident in the long term I'll see good growth in this portfolio. If we take a look at the graph here, we can see how the portfolio evolved over the last year. We can see with the blue line my regular monthly contributions, and we can see with the green line the portfolio balance. And we can see that for much of the first half of the year, there wasn't too much good performance. It was a good February, but for the rest of the first half of the year, the portfolio didn't grow too much, and the gap between the blue line and the green line was very small. However, in July, there was a good month for the portfolio. In August and September, the portfolio was pretty stagnant, and in October particularly, it wasn't actually a good month. And then November and December, the portfolio started performing better, and in December particularly, we can see it was a good month, and there's a clear gap between the value and the contributions in this portfolio with clear growth. So December has been a really good month, and you can see from this graph how good it's been compared to other months. And if we scroll down to see the performance of the individual ETFs over the last year, we can see that the HSBC MSCI World had good growth. It was up by over 16%. The iShares MSCI World Small Cap also had good performance, being up by nearly 11%, and it made a big comeback at the end of the year in December. The iShares Emerging Markets ETF had relatively good performance at 4.49%. If we consider it hasn't been a favourable environment to the emerging markets, and therefore not a favourable environment to emerging market funds. So I'm happy with that performance, even though it's lower than the other ETFs in my portfolio. The WisdomTree Cloud Computing ETF was actually the best performing ETF in my portfolio at 23% growth. So I'm very happy with that, as this is a passion sector and something I believe in. The The physical gold ETF was up by 6.73%, so solid growth. The battery solutions ETF was my worst performing ETF. It was down by 13.65%. So this is not good performance at all. This is terrible actually. I'm still confident in the long term of this ETF over a 5, 10 year, 15 year period that we'll see growth here. However, it's not been a good year and there's no hiding that. But it's only a small proportion of my portfolio. It's another passion sector and there's a reason why I kept it as a low proportion given its higher risk compared to the more diversified ETFs such as the MSCI World. And the final ETF there is the iShares Physical Silver, and this is also down over the last year in percentage terms, but it's up in pound terms. So overall, as I said before, I'm very happy with my portfolio's performance in 2023, and I'm hoping that everyone watching this, whether they use InvestEngine or a different platform, also had very good portfolio performance. I'm also hoping that 2024 will see good stock market performance, and we've already seen some positive market signals based on the rate cut information, the rate cut predictions from the Fed. I'm hoping the Fed follows through with this and other central banks in the world also follow through with interest rate cuts in 2024, as I really think it will benefit the stock market and benefit my portfolio. If you're thinking of using InvestEngine, it's worth noting they still have a great offer where if you deposit £100, you can earn a cash bonus between £10 to £50. There are terms and conditions, of course, and you can check out the offer with a link in the description below. And if you want to check out InvestEngine's platform in a little bit more detail, I have a video tutorial, a video guide for this, and you should be able to find it around here. Click around here, it should be there. But for this video, thanks for watching.